Hey everybody, I want to talk about some stocks that got crushed after earnings. We're at the tail end of earnings season. It's been an interesting one to say the least. Before we dive in, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. It is the best way to support this work I'm doing on YouTube. Again, fool.com/Frankel. And stay tuned at the end of the video for a special message from the Motley Fool. So let's dive right in. I want to talk about three stocks in particular that got crushed after earnings that I think are great buys right now. Two of them I own, and one of them I do not yet. So let me go ahead and share my screen. There it is. The first one, and this is one of my larger investments actually, is Pinterest. Ticker symbol PINS. The day after earnings, Pinterest had its second worst day ever. It was down 22% because of earnings, and not really because of the earnings themselves. I'm going to do a separate full deep dive on Pinterest earnings, so be sure to check that out if you want. But the general idea is the results were solid. The user base is the highest it's ever been. Monetization of the platform's increasing nicely. The reason that it fell is that tariffs are putting pressure on the international advertising business. A lot of people don't realize just how international of a company Pinterest is. Well over 80% of its users are based outside of the United States. So this creates some tariff-related headwinds that affect Pinterest to a greater magnitude than some of the other social media stocks. It took a pretty big dive after earnings. I think it is very attractive right now. It trades for like 14 times earnings right now. And it's already one of my larger investments, but it's one I plan on adding to if this price holds for a while. Number two is Walker and Dunlop. They are a commercial real estate company, finance company that focuses on multifamily properties. They have a sales division. They do financing. They provide mortgage servicing. They have an investment banking division. There's an appraisal business. They're kind of an all-in-one commercial real estate finance company. That stock took a pretty big hit. Really, results have been weak. There's some uncertainty regarding a small percentage of their loans that might have been fraudulent during the COVID era. I think that's scaring investors a little bit. This is a very, very well-run company. It's third-generation leadership. The current CEO's grandfather founded the company in the 1930s, and it is a really great company. The last 10 years or so have been really exciting growth-wise for the business. But really, the commercial real estate market's just really slow right now, and results have been weak. There's a massive refinancing opportunity as some of these loans that were taken out in the 2020 to 2021 timeframe start to mature and need to be refinanced. And if rates fall, then we could see just general activity pick up very, very nicely. The stock is down by well over 50% from its high that it reached during the pandemic era. And I think it's a great buy right now. I do own this one, but it's a much smaller position than Pinterest. One that I don't own yet, but has jumped toward the top of my watch list is number 3, Paycom Software. Ticker symbol PAYC. You can see the recent price there. It took about a 10% haircut after earnings. It does pay a little bit of a dividend. They are a provider of payroll software and HR software. They aim to automate as much of they call it the human capital management process as possible. They compete with a few big companies. The big one in their industry is ADP, but it's a lot of market share to gain. They're investing heavily in AI. Revenue's growing. Those margins are fantastic. 23% net margin. Trades for less than 18 times forward earnings. This is a company that's kind of been ignored by Wall Street for a little while, and it's one that is now back on my radar after the recent dip, and one that I am seriously considering adding to my portfolio at these levels. So I'd love to know what you think about these. Which of the three, if any, would you add to right now? I'll do my best to respond to any comments individually. Thanks for watching. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.